I'm Ashton Addison from EventChain for Investment Pitch Media and the Crypto Coin Show. And today on Blockchain Interviews, we have Andrew Kessler, the CTO and co-founder of Zenotta. Andrew, welcome to the show, and thanks for taking the time to be here.
Ashton, thank you very much.
I'd love to kick it off with a little bit of background on yourself. I know you're a longtime entrepreneur and have been through a long journey, and I'd love to hear a little bit on that and how that led you into blockchain and founding Zenotta.
Ashton, a very, very interesting question. I started off in academia. I was studying as a biochemist and ultimately an organic chemist as well. And so I came from the world of academia. It tends to make me more conservative and more skeptical. I think one of the differentiating points about Bitcoin is that it didn't come from a university or a military lab or a government. It really came out of Satoshi Nakamoto. And I myself at the time, 2009, remained quite skeptical about Bitcoin as a concept and even blockchain. I sort of had heard, that's how drug dealers get paid. And that was sort of the extent of my thinking about the technology. I met my co-founder and CEO, Rilo Barry, in about 2013, 2014. He'd just come back from Switzerland, where he'd actually been very much involved in meeting the founders of Ethereum and really been inspired about what crypto could mean. And coming back from that, he encouraged me over a coffee one day to read the Ethereum white paper. And I come from a very, very old school comp-sci background, in that I still had XTs and 286s. I programmed in GW Basic when it was still a thing. And I'd realized from my chemistry training that there's a lot of chemistry descriptions of how computers work. Sometimes certain classes of computer are called a state transition system. And when the Ethereum white paper started describing the ledger as a state transition system, a light bulb went off in my brain and I realized it's actually a path transition system. So my chemistry background and understanding sort of very, very obscure and arcane terminology in computer science sparked a fascination and an interest. I'd been working with biometrics and more in the space of other hardware cryptographic level security protocols. I'd even worked a little bit with novel sort of diamond-based semiconductor materials. So I was more physics hardware leaning. And this was really an opportunity to come into a very young and vibrant space and do something quite exciting in blockchain. So I looked at Rilo, my co-founder, and I said to him, this is going to be big. We have to do it right, do it slowly, and really think about what we're doing.
Definitely, and I really appreciate that you bring up the Ethereum white paper. I've talked to so many founders that they go back to the early days and they say, it's all about the Bitcoin white paper, but now Ethereum, and I've heard a lot of investors talk about recently how they think Ethereum is going to be more exponential growth than Bitcoin in the near term because there's so much being built on it and there's just an ecosystem there. So that's really interesting to hear. Now, I want to dive right into Zenotta. You founded it with your co-founder. You've been self-funded for a while now. Can you talk about what is the exact focus of Zenotta and what are the problems that your team is solving?
So Ashton, this is something that I hope we can condense into a relatively short space of time. I'm more excited in this discussion to talk about the why of Zenotta as opposed to the how. We have a very strong tech focus, and I am the CTO. And I'm told that that's the downfall of the way that I communicate the technology. So this is my attempt at the philosophy behind it. There's a problem associated with data in that data doesn't behave the way property does. And why is this an issue? It means that there's certain things that we're used to ascribing in terms of economic value and thinking to physical property, and we don't have the parallels to apply that to data. So for an example, if you had a bearer bond issued by a bank and it was worth $10,000 on presentation to the bank, and I took my cell phone and I took a photograph of that bearer bond, and I presented the photograph to the bank, they would not accept it. And the reason is because of functions like copy and edit, we cannot apply the legal framework of property to files. That's a problem. We have a very well understood institutional level framing and understanding of what assets mean in the real world, but what is a digital asset? And so what we've had to do is we've had to discount the gold standard. We had to move back from the notion of property as a basis for ownership. And in law, it's very interesting. You see that you have intellectual property versus property law. And these are two different kinds of classes of thinking about ownership around things. And what we did is we created a data formatting technology that can take a PDF or a JPEG and format it into something that is provably scarce, that is singular copy and ownership, and does not require access as the basis for ownership. I just want to build that out in 2 seconds. The problem with all of the incumbent attempts with using hash functions as pointers to assets is that they're taking a fingerprint to show that the asset hasn't changed from state A at time A to state B at time B, that there is a sort of immutability to the asset. That's not really the problem. If you imagine having that bearer bond, the fact that you've got the JPEG of the bearer bond on your phone and it hashes correctly doesn't give you the right to own it. So what we did is we realized that we could create identity-based ownership, not access-based ownership. And so what we do is we create a kind of unique binary pen. You can think of having a special pen that writes red binary, and I have a special pen that writes green binary. And so every file on my system is green, and every file on your system is red. If I rocked up with the Mona Lisa and I said to you, this is my property, you know for a fact it isn't. Access has nothing to do with it. And why we're so hung up on access is that networks only work if you give people access to your data. And if your model of ownership is based on access, does that mean you lose ownership by sharing your data? And we wanted to create a universe where there wasn't this paradox between how you claim ownership of a file and make it more comparable to traditional property. And so that was our first patent, that was our first technology we developed back in 2016. It's a very sort of unique signature scheme, but that allows you, Ashton, to own your file copy as independent from my copy. So when your browser or your application layer renders out the bearer bond, your bearer bond will look at application layer identical to my bearer bond. But when it's stored on disk, it's written in a different color binary. So what you can do is you can take your JPEG bearer bond to the bank, and they will recognize it as property and issue you your token amount.
That's very interesting because it's been such a long-winded discussion about owning your own data, but it's a matter of there's so many intricacies surrounding that and how you give access to others and how you can move it around and how you can give data to somebody else but then no longer have access to it. And so it does get very complicated. Now, we don't have a lot of time, so I want to dive into the Zenotta digital systems peer-to-peer trading system. And just want to touch back to, does this relate to owning your data in terms of the transfer of it? And can you just talk about the trading system and what makes it unique?
Absolutely. So Ashton, what we did then is we created a dual double entry on our ledger. And so what happens is Alice might be the client and Bob might be a merchant. And so Alice can really pay Bob in the first line entry in the dual double entry. And then Bob signs his uniquely provable ownable file as an asset over to Alice in the same transaction. So what we can do is we can effect an in-game item trade and the payment for that in-game item as a single entry into our ledger. And so this is really moving away from kind of, if you had to look through the Bitcoin ledger, it seems like almost a ledger of gifting. Alice just gave somebody free Bitcoin. Why did they do that? Nobody knows. The other problem is that if you try and move ownership off-chain through a VM or through some other construction, it doesn't have the same cryptographic protection from the blockchain. We're literally giving you the right to that unique, provably scarce file in exchange for the payment. And so the distribution of the product and the distribution of the token is fully distributed.
That's really interesting. And yeah, I completely agree with you in that when you look at a blockchain right now, Explorer, for the most part, you're just seeing this is transferred over there. And it's like, well, where's the actual exchange? You really are only getting half the information when you see a transaction, in this way and out that way. But like, well, what came back? So to have that dual transaction is really interesting. And I think as as you continue to grow out the network, that's going to be something that would gain a lot of traction. Now, you mentioned that you've been working on the project for a long time now, but there's different iterations and there's a launch of a network upcoming soon. Can you just talk about where you're at right now and what's with this upcoming launch?
What we realized is that if we're going to affect transfer of data rights, and we understand that this is not always associated with tokens, there is value in the universe that isn't necessarily well described by tokenizing it. So for example, a vote or my rights to be the author of some novel work doesn't require the presence of a token fundamentally. And so we've tried to capture the value of data both socially, legally, and economically beyond a sort of a more narrow token understanding of value. Where we are right now is we realize that this system will not get mainstream market adoption at 14 transactions a second. Mm-hmm. For us, scalability is a unique problem, especially with the rates at which data gets transferred and updated. And we had to spend quite a lot of time building a proof of work network. We're very strict on old school fundamentals. We like UTXO thinking. We like stack frameworks. And we've got a very interesting way to bring Turing complete languages into the system as a layer above the fundamental execution environment. And that's all going to be very exciting. And there's a lot of legal spin-off and consequence to that. Where we are right now is we've been able to develop a proof of work blockchain that hits off at about 800 transactions a second in beta testing. And when we go live, we expect it to be able to handle up to about 25,000 transactions a second. And that's a full proof of work, which a lot of people have claimed. It's a very different thing to see it. And this is not a trivial amendment. This was a 3-year leading in the basement exercise. We actually had to move. The problem was using hashes as linkages between blocks. We had to go to a hashless linkage system. And we needed to bring in specialized nodes to handle certain functionality. So right now, we've been able to build a proof of work backed blockchain that maintains the security levels of something like Bitcoin. We really are big fans of the original Satoshi insights. We're not particularly fond of proof of stake. In terms of providing the necessary security levels for something as valuable as data. And there's a long discussion to be had on that. We will be launching the commercial version of the data formatting technology within the next 6 months. And so people will now be able to not only, in the first 6 months, it will be a token heavy network, mostly showing off the payments utility. We really want people to become comfortable with how we've extended proof of work to understand our consensus mechanism and have a very fundamental discussion. Next, we will be releasing the Zenotta data protocol, and that's all at the base level. When it comes to the engagement level for integration into applications, there we have a suite of languages which we will be releasing. So it's going to be a very, very busy time over the course of the next year.
Yeah, it sounds like a lot. And I like that you're going back to the fundamentals and the proof of work blockchain sort of based on Satoshi's vision. Now, there is a token ecosystem that's built into the blockchain as well. Can you talk about the Zenotta token ecosystem? What are the main functionalities of it, and how does it create a sustainable ecosystem?
Very good question. We've realized that there are several models that you could use to kind of justify pricing of Bitcoin at its $30,000 or $40,000 mark or higher. You start off by looking at kind of the utility of what a token can offer in terms of payments. And then you're really looking at roughly the square of the number of users. You're kind of using Metcalfe's rule to approximate the value of a token. So for example, a network that has 10,000 wallets is infinitely less valuable than a network that has 100,000 or 1 million wallets. So it's really sort of a payment utility driven. There's a lot of speculation and volatility associated with traditional crypto prices. And this isn't purely based on the naive belief that it's gambling or that it's purely wild speculation. This is in a simple observable in economics that if you have something that's provably scarce and a finite amount of it, the price must be volatile against supply and demand. And that's why the dollar doesn't have a static supply. They adjust for the supply to meet the demand in order to bring price stability towards a sort of a more typical fiat currency. But the big thing that really helps stabilize the dollar in the long run is that it's backed by a bunch of goods and services. It has a sort of associated GDP. And that's one of our real strong suits. We have a GDP of data. So initially the token could be priced at the raw production cost, the amount of electricity consumed in order to produce one token. And then it might be priced according to token supply and speculation. But what we have is we kind of have Bitcoin, and this is not a perfect analogy, but it's sort of like the old gold standard type of currency. And of course, what happened in I think it was the late 70s, the late 60s or early 70s, is the US had to move off the gold standard. And the reason for it is very straightforward. The value of the economy had grown beyond the amount of gold supply. So we will get to a point where the value of the smart data assets and goods and services being traded on our network outstrip the value of the token supply. And so we will have to move away from the gold standard towards having this thing backed by the goods and services under management. And that will create a very stabilizing effect. So while we expect to see quite a good growth in the price of the token over the first couple of years, once it hits a sort of once the growth of the economy moves from exponential growth to more marginal growth, we expect the price of the token not to crash, but level off and stabilize out. And if you think about trying to short the dollar, you have to be a very brave character at taking that kind of risk because of the goods and services backed by it. And we will have the same kind of mechanics built into our ecosystem.
Yeah, it's great, Andrew. I really like that analogy that you've made there. And there is a lot to do with the there's a lot of intricacies in the ecosystem there. So all the best as you launch the network in the next 6 months. Now, on the flip side, what are some of the challenges and setbacks that you anticipate towards getting mainstream adoption of having the goods and services and the double transactions and the growth of the network for Zenotta?
Yes, well, unlike a one-sided ledger that only has to worry about building our token supply, we have to worry about building out smart data supply as well. So in the early days, a lot of our economic growth strategies and our economic activity stimulation projects will be centered around building out the supply of both. We have a sort of a tight rope to walk where we do not want the token supply to be increased too rapidly to maintain the token price during the speculative phase of the project. And in later stages, we have to get, and the trick is not to focus on one data asset type, but rather building out a topology with the ecosystem where we define different data asset classes. So just like a traditional bank would have different asset classes with different risk profiles, we would like to partner up with several banks to help us build out a data asset risk topology and build out assets strongly within each of those classes. And so one of the difficulties and setbacks that we are going to have is to be able to form partnerships. Like all tech companies, we're a relatively small startup, we're lean, we're growing fast, and that can produce challenges when trying to integrate with very, very large organizations at scale. And so we're going to have to manage that particularly carefully.
Definitely. And we're running out of time, Andrew, but what is the best way for the community to follow along with Zenotta's updates and towards the launch of the network?
Yes, we have a website that you can go to and you can contact us and register your interest. We're looking for not just the usual stakeholders. We're looking for a lot of feedback and integration from the development community. We will be posting a lot of media milestones as we roll out and as we grow our system. So if you can contact us via the website directly, we have staff manning that site 24 hours a day, and we will contact people shortly. I would prefer to see more engagement within the development community and get our fundamentals correct, because if our fundamentals are good, we'll win in the long run. So that's really going to be our core focus over the next couple of months.
Sounds great. I will leave those community links in the description box below. All the best with the launch of Zenotta. Andrew, thank you so much for taking the time to come and speak with me today, and let's follow up in the near future.
Ashton, thanks so much.